Hi, and welcome again to another edition of today's market analysis for February 17th, 2023. I'm Giovanni Benacourt, analyst, trader, and operator with Vantage Markets. Well, markets are finally catching up with reality. It's a time to price in rate rises. Recent data have become too much for markets to ignore. The bond market priced in further rate hikes following the blowout January jobs report, higher than expected inflation figures, and strong retail sales. But the stock market had been struggling off strong economic data. It seems reality is now hitting home for stocks. It's hard to know what the final straw was, but a 0.7% monthly jump in producer prices and some hawkish Fed comments seem to have done the trick. Cleveland Fed President Loretta Mester said she saw a compelling case for a 50 basis points increase at the central bank's January meeting, adding that the Fed needs to do more to get inflation back to 2%. St. Louis Fed President James Bullard said he joined Mester in pushing for a larger increase last time around and didn't rule out a 50 basis points increase at the March meeting. Neither Mester nor Bullard are voting members, and the quarter point hike was unanimous, but it does signal that more aggressive rate hikes are at least part of the conversation. Since the January meeting, economic data have arguably strengthened that case as well. Another chance change for the March meeting will be the absence of Leo Brainard, one of the more dovish members of the Fed, and an influential one, who is off to advise President Biden. The belief that a Fed pause or even pivot isn't far off has driven the market's run so far in 2023. That belief may now be slipping away along with some of this year's gains. So, with that being said, let's take a look at what we can expect for today. I am continuing to look at selling at a sell off in the markets, continuing from yesterday's sell off. Okay. Uh, but it could be a measured one. Perhaps we could see just a short momentum to the downside and see if we can find some support around this psychological support level of 12,200. The real psychological support will be 12,000. But we could use this as a previous stop. So the first support, then the second support. So if that's being broken, you have at least 200 points to catch that. Okay, so that's the case for today. Selling the equities. All right, then the S&P 4,000 is the psychological support level. But before that, obviously 440 will be mine to look at. And the Dow 33,300 will be that support. 33,400, the first one, right? As far as for crude oil, I'm looking at $75 for it to come down towards that value, right? As they continue to sell off, and that obviously is going to depend on something called the dollar index. I believe that the dollar index, if we continue to move higher, it will obviously push prices lower for the equities, for metals, obviously for the currencies as well. Okay, so that keep that in mind. As far as for Nat Gas goes, I'm looking at 220. We saw yesterday. We've been seeing Nat Gas just really trading in a very narrow range, and that has really actually has broken out of that range. So the momentum to the downside continues. Then we have here what's called gold. I'm looking at gold perhaps to find some footing now, to have found that footing, and perhaps come back up to 1850 if the dollar index starts to move higher. And then we have here silver. The same token goes with silver, perhaps going back up to 21.50, $22. Uh, copper, copper. I'm looking at copper just to stay really idling right here where it's at. I think it'll come down to $4 and perhaps find some support here, or it'll just stay here idling around the 4.05. Then we have Bitcoin. Bitcoin after a nice jump to the upside above 25,000, it opened to be like gap down. So will that gap be closed? It could probably be the case. So initially some buying into that, but really careful. You could use the opening of this candle, which is right around the opening of the candle was at 24,624. To use that as a resistance because you could probably get there, okay, and then just find that resistance go back down. And then we have here the euro. I'm looking at the euro to stay around the 106.50 and the pound to stay around the 119.50. But if the dollar index continues to move higher, then we'll see pound hitting that 119. We'll see the euro hitting that 105.50. We'll see, well, Bitcoin probably stay flattish. Perhaps we'll see silver come down to the $21. Then we'll see perhaps gold coming down below 1820, and obviously the equities continue to move lower. So all in all, we are going to have a down a opening the downside, and will that momentum continue throughout the day? That's what we're about to see. But at least we know that we are going to open down, and that momentum will most likely drive the markets lower at the open. So keep in mind that, and have a nice weekend. I'll see you on Monday.